Hello everybody, so this video is entitled MSTR stock jumps 22% plus. Yes, I've been telling you these days would come back. But anyways, secondary title for video, Bitcoin not dead? What? Bitcoin is not dead? What's going on? What's happening? So folks, I think I figured it out. The internet and the loud people on the internet, the loud people in my comment section, the loud people on X, these population is full of crybabies. Turns out Bitcoin's not dead after all. Like, okay, are you kidding me? Okay, we're past $70,000 now. Okay, we took, well over 10% in 24 hours. So Bitcoin's not dead after all. What? People's opinion change in a matter of hours. This TikTok culture has to stop. The attention span of 30 seconds has to stop. As Saylor said it, and I fully agree, and I think Saylor's stake would apply to most of my stocks. It would apply to HIMS. It would apply to Tesla. Now, Tesla turns out is the only stock out of the three who's kind of not down. But the point is, when you buy highly volatile assets, you have to be willing to handle the G's. If you can't handle the G's, you should not own volatile asset. If you are going to own an asset that is capable of doing times 5 your money, 5x your money, that also means by definition that that asset is also capable of doing an 80% drawdown. Okay, volatility over the short term is both to the upside and to the downside. But over a very long term, and that's why I say I think this applies to Bitcoin now, I think this applies to stocks now, because the market has gotten so crazy. If you don't want to own a stock or an asset of any sorts for more than 5 years, you should not own it at all. The time of short-term investing, I think, is mostly gone today because you can have a tweet over the weekend who can make the markets crash, right? Right now we feel good. Bitcoin's back at 70. I don't know what's going to happen on Saturday night. What if we get a random presidential declaration of some kind that drops the price another 10%? Short-term, this market has become really closer to gambling. It's very unfortunate. I've said that before in my video. Like, I don't understand why AMD and PayPal were down the same. Well, essentially one of them was talking about potentially being one of the biggest companies in the world in the future. The other one was essentially going to die. They're down the same. So over the short term, it's nonsense. But if you look at the volatility of these assets, and if you're willing to handle the G's, you will be doing very well. Like I said, MSTR pre-split, I got in the low 20s, in the low $20. So this is still like kind of a 6x, right? Held it till past 400, and now till past 400, it's back to 129. Do I care? No, it's Amazon CEO, right? Jeff Bezos, he went through 70% plus drawdowns on a stock like Amazon. When you have an idea whose time has come, this is when you have conviction. This is when you're not a crybaby and you handle the G's. And take it with philosophy. And these brokers have not done a good job. I've always said this. I wish brokers would have a way to hide the total sum on your account. Your brokerage account, you see the total sum when you open the app. It'd be a good idea if brokers had a little button you could click and you could hide that. Because the problem with and it's called prospect theory, the problem is that when you see the red, it creates a lot of pain. That's why we say price drives sentiment. People see red, it creates a lot of pain, right? And so when you look at the dollar, you don't see the red. You don't see the devaluation in the dollar. You don't have an M2 money chart in reverse incorporated in your app. Really, you should look at M2. You should reverse it 180 degrees, and you should see that's the melting of your dollars. Your dollars are melting. Anyways, So seriously, strategy is behaving totally as intended. In fact, it is doing better than intended. Yesterday, folks were telling me I was delusional for saying strategy was outperforming. Yesterday, strategy was down 17%, while Bitcoin was only down 13%. And they told me I was delusional. I'm not delusional. You're outperforming. If strategy is down just a tad less, it's below that correlation. Strategy is going back up. If you look today, once again today, strategy is outperforming. It should be 1.5x. We're at 9.6% on Bitcoin. Strategy is up 21%. So strategy outperformed yesterday, and it outperformed today. The long-term guide that Saylor has told us is roughly 1.5x. And actually on the call, if you listen to the call, at one point he mentioned 2x on the call, 2x correlation. So maybe the correlation long-term is going to be a little higher than that. I don't know. It depends on the amplification. It depends on how much stretch he issues. But the point is, strategy is an amplified. We don't use the term leverage anymore. We use the term amplification because he's moved to perpetual debt, perpetual preferreds. Perpetual preferreds, that means you never have to pay it back. You just pay interest forever, which you can do because over 100 years, the currency is going to zero. That coupon is staying the same. That coupon in 2070 will feel like pennies. Study Harvard. Harvard pays its debt to the state of Netherlands. It contracted debt from the Netherlands in the 1600s. They have a ceremony every other decade where they issue the bond payment, the coupon. They issue the coupon to the ambassador of the Netherlands, and it's something like 60 cents or like 90 cents or like $1 because they contracted that perpetual debt 400 years ago. Go look that up. Go to look at the Harvard old debt. This is the same story with perpetual debt. Strategy brought back perpetual debt, debt that does not need to be repaid. And the convertibles will equitize. They will equitize. And Saylor also said on the call, the cash that they raised, they can use it to pay off the convertibles, and they have enough cash to pay off nearly half of the convertibles. So anyways, this is amplified Bitcoin, which is designed to be held for the long run with non-mark-to-market debt. In fact, perpetual debt is much better than non-mark-to-market debt. It's debt that never gets marked because it's debt that is never meant to be repaid. It's genius that they brought back perpetual debt. Okay? And be very careful of instruments. Yesterday I was, kind of angry at MSTX and all of these 2x instruments, and I don't even know what they've become now. But, people need to be careful also about futures-based instruments like B2, for example, right? 2x, Ultra Bitcoin, ProShares Ultra Bitcoin. This instrument can get wiped out. This is an instrument that can get wiped out. This is a leveraged instrument with mark-to-market in it. There is some mark-to-market in it, so it can get wiped out. You heard yesterday on the call, Saylor said, if Bitcoin, we can last years if Bitcoin hits, if Bitcoin stays at $8,000, we can last years. That's the beauty of the strategy business model. Now, the problem is that you get all of this chatter of people who don't follow the company, who don't understand how it works, who have not listened to all of the calls, who have never really studied Bitcoin. So anyways, it's just extremely frustrating. And like I said, let me go back to the thing. You can't expect to board a rocket if you cannot handle the G's. If you fly to Europe or you fly to America, you get on a big plane on a 777, do you cry when it takes off? Because, you're taking maybe 1.5 G. Oh my gosh, your head is stuck on the seat. Do you cry when the airplane takes off? This is the same for strategy. Of course, there's going to be movements. It is designed to have movements. This stock is designed to do a little better than, today a lot better than Bitcoin on certain days, and it's designed to do a little worse or sometimes a lot worse than Bitcoin on other days. It is the nature of volatility. Now, if you look at Stretch, Oh my gosh, yesterday people were looking at Stretch. Again, I got it in this comment section. They were looking at Stretch and they were taking the after hour price as gospel. And they were because after hours it dropped at like 92. After hours is a very imperfect pricing. There's no volume in after hours. The pricing, you're getting ripped off if you're selling after hours. There's no volume. Okay? After hours is not meaningful. These are the artifacts of TradFi. A lot of issues, for example, related to ex-dividend, related to, the movements on Friday evenings and Monday mornings. These are all artifacts of TradFi. In fact, if you were to take, say, a 30-day moving average on Stretch, and you take, the midday price of Stretch over 30 days, you will find that Stretch is extremely unvolatile. It is super not volatile. And it's at 98 right now, and we're racing back to 100. Will we be back near 100? Historically, this stock 99, 99.20, 99.50. Will we be back there on Monday or on Tuesday? Probably something like that. But of course, there's some people who can't even handle going from 100 to 98. They can't even handle that. May I remind you, Bitcoin is at 70,000. Stretch has barely budged. Stretch is at 98. Bitcoin is at 70,000. You could have bought Stretch for the same price when Bitcoin was at 120. Bitcoin was at 120. You buy Stretch in early October 2025. Today Bitcoin is at 70. Your Stretch is worth 98. Do you really complain? No. Stretch has stripped out the volatility. Stretch is for those who don't want to get on the rocket. They want to be cozy. They don't want to get the volatility. He created that instrument. And of course, on this channel, as you know, I prefer Strike. I think, so Strike, the easiest way to design Strike, to describe Strike, of course, Strike is still yielding more than 10%. So like right now at 76 for Strike, you're still at more than 10% here. So think about that, first of all. That's really, really good. It's also return on capital. And what I love about Stretch is that you don't get any of the MSTR returns until $1,000. After $1,000, after strategy is worth more than $1,000 or more, all of the upside returns to you. Strike is, to me, kind of the best of both worlds between people who still want to have the very, very long-term upside of strategy, very long-term believers, learned people who know about Bitcoin, who studied Bitcoin, but who also cannot, quote-unquote, handle the G's within the next few years. Strike is a really, really good instrument for that. If you can't handle to see your account move out, but you still want to have some of a super long-term upside. And in fact, if you look at Strike, Strike's performance since the IPO, so Strike, of course, was the first instrument he issued. It IPO'd at 82.75. Strike right now is actually 76. So barely moved. From 82 to 76, barely moved. For some people, of course, that is too much of a drop. But it barely moved. And you can see in the same time, strategy was down 70%. Strategy was down 70%. Strike was down 5.5%. Actually less now. Strike down 4%. And you still get your 10% yield. And you still get all of the upside of strategy when strategy reaches $1,000 a share. And if you know what I think about strategy on this channel, this is a very long-term hold. This is a hold way into the 2030s, and I think there is tremendous upside. Over $1,000 for strategy stock. It's just that most people can't even think 5 years out, so they don't even envision that this stock could be worth $1,000. So I think it's the best of both worlds for those who can't handle the G's. Now me, of course I can handle the G's. It's like Tesla, HIMS. This is nothing, right? This is nothing. But you have to take it for philosophy. Some people absolutely can't handle the G's, and that's why Saylor created the prefers, and that's probably why the credit markets even exist. Is because some people really, really, really can't handle it. They think pain. They think it's pain. As for Bitcoin. So first of all, as you know, I saw paper Bitcoin trending this morning. I've said the past few days about the drop of Bitcoin that I don't think you could have gotten a lot of Bitcoin at 61 or 62,000 yesterday. Like if you had wanted to buy 1,000 Bitcoin at 62,000, could you have gotten that number filled? I highly, highly doubt it. And that's why Bitcoin is going back up really, really quickly. And now it's the shorts who are getting liquidated. We let in Wall Street into Bitcoin, and that means it seems like the volatility of Bitcoin is getting crazier. But then again, is this really the fault of Bitcoin, or is this just modern culture, or is this just the 2020s? I mean, because all assets are extremely volatile. It's not just Bitcoin. Like, look at Robinhood, look at Palantir, look at some assets have nothing to do with Bitcoin, and they're equally volatile. Right? Nvidia was down 4%. I can't count how many days Nvidia was down 4% back to back. So it may have to do with the short attention span culture we're on. It may have to do that, Wall Street has replaced, people in their 60s, they retired and they got replaced by young, 22-year-old who are quants and who grew up with TikTok and who can't wait. So the volatility, and of course the geopolitics, of course, the politicians are today, they are much more volatile, much more unpredictable. Technology moves so much quicker too. There's always a fear that somebody's going to disrupt something, that something's going to be disrupted. So high volatility may actually be just the new standard and the new normal, and we need to be used to it. And perhaps the high volatility is not just specific to Bitcoin. But anyways, it seems like now the shorts are going to get liquidated, and the market makers are making the price of Bitcoin go up to liquidate the shorts. Now, as you know, I have very little respect for technical analysis. Remember, everybody was calling for 180 Bitcoin in December. So yeah, I have very little respect. Some of them that are more favorite or not. I watch it mostly because the channel who I follow in technical analysis is Marty Party. Marty Party, of course, was he thought the bottom was at 77, right? Ended up shooting down way more than that. So my favorite technical analysis is I think the models are useful. Some of these models are useful, but they're all wrong. Technical analysis is useful, but it's also wrong. And just some people are less wrong than others. So let me know if you know anybody in technical analysis that is better to follow. That doesn't back me because I'm a long-term holder. Again, I have no idea where Bitcoin is headed short-term. I don't think anybody has any idea, right? We could be back at 80K next week, or there could be a tweet that takes the price down. But you can't predict the tweet. That's the problem. So my confidence over the long term is unbreakable. Over the short term, my philosophy is don't get wiped out. Don't do any ETFs that have X behind it, where they're not designed to be held for more than a couple days, right? Be unbreakable. Don't get wiped out. That's the rules of the game. And if you can't handle to see your account in the red, which it likely still is in the red for a lot of people, this is time to shut down the app, maybe delete the app. If you don't have any leverage, you can totally delete the app and just study Bitcoin. Go read the audiobook, The Bitcoin Standard by Saifedean, and there's a lot of newer books you can read too. Just go study Bitcoin. Go look at the Sailor series. The Sailor series that he did with Breedlove. It's a 20-hour series. There's I think 16 or 15 episodes that he did in 2021, laying out entirely the thesis for Bitcoin. Best 20 hours you'll listen to. A little dry at times, but the best you'll listen to, and grow your conviction. So anyways, of course, we celebrate today. Of course, am I surprised? No, I'm not surprised. But if it had dropped to 50, if Bitcoin had dropped to 52, I wouldn't have been surprised either. Short term, I have no idea, right? So, but long term, my confidence is unbreakable. So anyways, this was not financial advice. This was not investment advice. This is just entertainment. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.